Let's start with the famous and often deceptive question that occupies the mind of almost every trader from their very first day in the markets, often costing them countless hours of sleep. Where is the price going next? Most people try to answer this by piling dozens of complex indicators onto their charts, waiting for oscillators to cross, or searching for a magic formula. However, the legendary trader Joe Ross invalidates this question from the very beginning. To him, trying to predict the future of the market is no different from trying to navigate a vast, uncertain sea without a compass. Joe Ross's approach, crystallized through more than 50 years of experience, is not an art of prophecy but a mastery of reading structures. The sharp line that separates Ross from all other analysts and market gurus is his firm refusal to be a prophet and his choice to be a market reader. In his world, price movements are never entirely random. Yet, this does not mean that knowing exactly what will happen in the future is possible. This paradox, the fact that price has a structure while the outcome is always uncertain, forms the unshakable foundation of Joe Ross's entire trading philosophy. At the heart of this philosophy lies the concept he calls the law of charts, which represents technical analysis in its purest and most refined form. Ross advocates a premise that seems quite ambitious upon deep inspection, but has been proven historically thousands of times: the chart of anything that has value and is subject to supply and demand, be it the seasonal water level of a river, computer-generated random numbers, or the stock of the world's largest corporation, must produce specific structures. This is because a chart is actually the visual result of a process. However, the primary driving force that distinguishes financial market charts from others is human behavior itself, collective psychology. Every single candlestick, every wick, every gap we see on a chart is actually an emotional footprint. Fear, greed, impatience, hope, and frustration are the ink of these footprints. According to Ross, technical analysis is not about struggling with the mathematical formulas of indicators. It is about making sense of the structures formed by these human traces within the current context of the market. For Ross, a chart is not a signal board, but a living and constantly changing map of behavior. When we begin to read this map, we encounter the 1-2-3 formation, a structure Ross introduced to the literature that has become indispensable in the professional trading world today. However, we need to make a very critical technical distinction here, as this structure is often one of the most misunderstood topics. Most amateur traders try to use the 1-2-3 structure as a simple buy or sell button when they see it on a chart. For Joe Ross, the 1-2-3 is never a standalone mechanical entry signal. It is background information, a way of reading the market's current intent. A 1-2-3 formation occurring at the end of a trend or at the breakout of a long-lasting sideways market whispers to us that the market is making a serious attempt at a direction. Point 1 is where the previous move has finally tired and run out of breath. Point 2 represents the first determined attack of the new direction. Point 3 is that psychological boundary, where the market's attempt to return to the old accustomed direction ends in failure, meaning the opposing side is beginning to give up. Classic technical analysis books usually tell you to enter a trade when the level at point 2 is broken, but here, Ross stops and gives you a very stern warning. The place where everyone enters is usually the most dangerous place, where professionals are waiting to take profits and exit. Big players, institutions, and algorithms know very well that small traders pile their stop levels and entry orders exactly at that obvious point 2 level. This is where Trader's Trick Entry, or TTE, comes onto the stage as the greatest proof of how clearly Joe Ross reads market realities. TTE is not just a formation, but a genius of timing and strategy that turns liquidity traps and stop hunts in the market into an advantage. Ross noticed that if a market is truly going to break point 2 strongly and continue on its way, it will leave small footprints, micro-level clues of its strength before reaching that point. The Trader's Trick Entry catches those short pauses, those low-volume correction bars that price makes during its journey from point 3 toward point 2. By entering the trade upon the breakout of these bars, before the main breakout happens and before the crowded masses rush in, we gain a massive advantage. The technical logic here is profound. If we can enter before level 2 at a more advantageous cost, we are already in profit by the time price reaches that critical and volatile level 2. Ross calls this the free trade stage. Even if the market sets a trap in that area, we have already minimized our risk or moved our stop to the break-even point. However, the most vital condition of the TTE is the space principle. If the distance between your entry point and the target at level 2 is not wide enough to cover transaction costs and give you room to breathe and neutralize your risk, that TTE is mathematically meaningless. Joe Ross reminds us at every opportunity that an uncalculated risk with no statistical backing is more dangerous than the most perfect-looking formation in the world. Moving one step beyond this structure, we see the fuel that ensures trend continuity, the Ross hook. After a 1-2-3 structure is confirmed and that famous breakout occurs, the first meaningful correction that follows is a hook for Ross. This hook confirms that the trend is resting healthily, that profit-taking is being absorbed, and that the market is gathering strength to move further. However, looking at every hook we see as a trading opportunity can lead us to ruin. Ross pushes aside even the most flawless-looking hooks when the market is overextended, when volatility has increased uncontrollably, or when the price is trapped inside a congestion or indecision zone. His famous warning is the foundation of a successful trading career. Not every opportunity you see is your opportunity. This approach transforms trading from a game of transaction frequency into a game of high selectivity and patience. For a disciplined trader using Ross's systems, there may be only 2 or 3 valid trading opportunities in an entire month. Professionalism is the ability to sit in front of the screen and wait without moving a finger until those 2 real trades appear. This is exactly where most traders lose. The desire to trade overcomes the discipline to trade correctly. Perhaps the least discussed but most important part of technical analysis for Joe Ross, the part where he is most strict, is the management of risk and targets. In Ross's systems, stop levels are never determined based on feelings or a random candle on the chart. His stops are based on a completely objective and statistical foundation. Long before entering a trade, the data of how much similar structures have moved against the price in the past, the noise level of that market, is examined. The stop is placed exactly one step beyond where the statistical noise ends. Targets are never determined by dreams or greed, but according to the current volatility of the market and the principle of repeatable profit. For Ross, trying to stay in a trade from the very beginning of a trend to the very end is not technical analysis. It is a form of gambling. Instead, taking that safe and high-probability slice that the market is already willing to give you and leaving the table is a sustainable business model. Perhaps the most revolutionary message of all of Joe Ross's teachings is this: never think during a trade. This simple-sounding sentence actually holds the deepest secret of trading psychology. The analysis process, the setting up of all scenarios, the probability calculations and risk allocation must be finished long before that entry button is pressed. Trying to perform a new analysis after the order has been sent, looking at charts to produce scenarios, or worrying if the price will turn from here only invites adrenaline and fear to take over logic. According to Ross, a true trader, after entering the order, should act like a machine stripped of emotions, following their own plan to the letter. This is exactly why he compares trading to a tennis match. For a tennis player, the ball sometimes hits the net, and sometimes it lands a millimeter outside the line. This is part of the statistical nature of the game and is not a personal failure. What matters is that at the end of the match, the successful shots that cross to the other side of the court outweigh the unsuccessful ones and carry you to victory. Therefore, tracking daily profit and loss is completely meaningless to Ross. He focuses only on what is left on the table at the end of the month, the end of the quarter, and the end of the year. In other words, the overall portfolio curve. What makes Joe Ross and his priceless approach, which we call trade secrets today, truly successful is not the complexity of his system, but on the contrary, the tremendous simplicity it offers. Instead of trying to solve the natural complexity and noise of the market with complex mathematical indicators, he chooses to trust the naked and honest structure of the price itself. Most traders read Joe Ross, admire his strategies, but unfortunately, after only a week, they start adding new oscillators, new trend lines, or new rules they've made up themselves to this system. This is because the human mind finds it difficult to believe that something so simple can be so powerful. It always assumes that what is difficult and complex is more valuable and functional. Yet the entire secret of Joe Ross's 50 years of success comes from his ability to remain faithful to that simplicity and that rigid discipline for decades without straying for a single day. Using few tools but using them with the great precision of a surgeon's scalpel is Ross's indelible signature on the market. In closing, we can summarize the most vital lesson we should take from these deep teachings of Joe Ross and his technical analysis philosophy as follows. Trading is not so much a war won with candles or lines on a chart, but rather an internal victory won against one's own impatience, greed, and lack of discipline. Every second it exists, the market will try to deceive you, hunt your stops, drive you to panic, and play with your emotions. That is its nature. However, if you have a structure like Joe Ross, a mathematically tested plan that fits this structure, and above all, the will to stay faithful to this plan no matter the cost, the market ceases to be an area of chaos for you and turns into a massive map of opportunity. Joe Ross teaches us not just at what level to buy, but how to think like a trader. A real trade is won not while the candles on the chart are flashing live, but in the plan that was established in the mind, written on paper, and protected with discipline before those candles even formed. Far more important than how much money you make in the market is how long you can survive in it. Because for every trader who survives in a disciplined manner, the next great opportunity is always right there. If you want to include this timeless philosophy and technical tools of Joe Ross in your own trading journey and start a step ahead of the market, the only thing you need to do now is to test these structures hundreds of times on past charts, in different time frames, and in different market conditions. Remember that raw information is only a potential. You reach true power when you knead that information with practice and turn it into a skill. Trust your strategy, do not stray from your plan, and always remain disciplined.
Thank you for watching our video. In the next episode, we will examine the journey of another legendary trader. Don't forget to subscribe and turn on notifications. For more content and strategies, you can join our Telegram channel. The link is in the description.